All right, let's get started in the markets. We want to check in with Todd Horwitz here in just a moment to get his thoughts on what we're seeing happen and take place over in the grain market. Now, first of all, it's the corn, and it is actually on the higher side here. Now, off of some of the highs earlier today, we got all the way up to 325.25 on the July contract. We're sitting at 323.5 now. That's up 6.5 cents, and most all the front five contracts are anywhere from 6 to 7.75 cents higher. Soybeans have backed off some of their earlier highs as well. August up 2.5 at 862.5, and November's up 1.25 at 862.5. Got 1 penny higher than that early on, but again, like we've pointed out here, just a little bit of a pullback. Now, Chicago wheat, the July's up 8.5, the December's up 8.25 cents. Over in the Kansas City wheat market, July's up 2, but that December's up 3.5 pennies. Minneapolis wheat for December is up 1/4 now. The July is still down 2.5 cents. And the December cotton is down 12 points at 59.38. Todd Horwitz with Bubba Trading is joining us now, live from his studio, his office right there. Well, first of all, Todd, quite a rebound over here in the grains today, and we've softened a little bit from some of the earlier highs that we saw earlier today. Is there anything we can read into this?
Good morning, John. When you look at the grain markets, corn and wheat are almost identical. They were both so oversold at the end of last week, it only made sense there was going to be a pretty big bounce. Now, corn itself, if it can hold 330 on December, I think we're going higher. But the low it took out, remember, July did not take out their earlier low, but December did. So it's a little bit tenuous here. So if December can hold 330, I think we're going to be going much higher from here. If it doesn't, I think there's still a lot of work to do on the downside, unfortunately. Wheat is still broken down, and it needs to get back near 495, 496 before I'd even think of wanting to get back into the wheat market on the long side of it. So I think they're trading almost identical. In soybeans, they were much lower. They were a little bit higher. Now they're right back just slightly higher. And again, if they hold here, I still like them. 860 is a key level for November beans.
So if you're a producer and we're watching all of this wild fluctuations and swings here and the forecast is uncertain, then how do you protect yourself to the downside and leave your upside open?
Well, I think that, this is one of the things I try to always preach and teach is to be always hedged against downside risk. And if you use some of the methods that we use, it just allows you to be protected to the downside so you have no worry and no fear if the markets break. I mean, certainly we don't want them to break, but if they go straight up, you get paid. And that's what we're trying to do. And that's the position that all farmers and producers need to understand to be in, is where they can always have 100% protection down and yet leave 100% protection of gains to the upside, because at one point we're going to get another big market, John. Now, whether it's going to start tomorrow, a week from tomorrow, next year, we don't know that. But we do know that we want to be prepared, and we never want to give up that upside range that we can get into, because we know that markets don't announce themselves, and someday we're just going to show up and start to rally.
Can we get any help from the outside markets like the Dow or any of the financials?
Well, today and tomorrow are going to be real tough days to read in the outside markets, because you've got quarter end, month end, and the Russell Index does their annual rebalance this week, by tomorrow. So it's going to be really hard to get a real grasp. We opened much lower overnight, and I wrote last night and this morning that there's no chance, no problem, there'll probably be a big rally from here. And of course, you're seeing it because you're seeing some what we'll call window dressing. So certainly, some of that money that might flow into the grain markets later is going right now into equities. However, we're still seeing a bounce, so it still looks pretty good. But overall, I think the key will be more towards the end of the week for the outside markets when we get to the jobs number on Thursday.
Good point. Well, I tell you what, we'll come back and talk the meats. That's straight ahead. So stay with us right here on the Market Day Report. All right, let's get back to Todd Horwitz at Bubba Trading. Todd, first of all, a little bit of weakness over here, a little bit of pressure in all of these livestock markets. Can we attribute this to anything?
Well, I think if you look at feeder cattle, you might have, the big move in corn is certainly, I think, creates a quick reaction to, that price, which is, I think they're down about $1.20 last I looked. But again, I think that the cattle looks still pretty solid, and I'm not surprised a small pullback. Small pullbacks in markets that are trying to go higher are always healthier than not. and they're usually just buying opportunities for those that want to get in. The market that still is of a concern is hogs. Although they're higher today, I would expect to see in hogs in the next couple of days a limit up move, but again, that still won't break the overall downtrend. But what we are seeing in hogs is the what we call the contango, where we're starting to see higher prices, even in December, which is usually one of the lowest months of the year. So we're starting to see a potential that maybe the hogs are going to finally find a bottom, and we'll get some movement there. But again, a lot has to do with the economy as well for both fats and feeders and hogs.
So let me run through these futures here, and then I want to come back and talk about the economy just a little bit, because I know that you follow that closely. Right now, August live cattle down 32. The October's down 25 at 99.22. Over in the feeder cattle market, and these quotes provided by Bar Chart, August is down 125. The September down $1.35 at 132.42. And yeah, Todd mentioned those hogs today. August is up 80 at 48.92. The October up 65. But what about these outside markets? And I want to focus in here, and we'll pull it up here so we can talk about this. Is the dollar, because so much of our commodities depend on how competitive we are because of the dollar. And today, the dollar is just kind of mixed a little bit stronger here. What are your thoughts on the economy and the dollar and how it relates to it?
Well, I think the economy is going to be fine, John, but the real problem, once again, is we're going to have to slow down the amount of people that can go to restaurants. We're going to have to slow down, all these events that are really important for farmers, because, again, it brings more demand for beef and other things in restaurants, which we're not going to see. So that's a little bit of a problem. But I think the economy will be fine as we can get open. And as long as there's not a major meltdown on this COVID, I think everything will be good. The dollar itself, I think the dollar's going higher again. It got down to that 95 target you and I talked about, and now it's starting to move higher again. And with all the manipulation, all the Fed trying to put pressure on the dollar, it has not really worked. And this dollar is starting to think on its own. And of course, the dollar not only is the commodity benchmark, but it also is a fear asset that many places go to when they're a little bit afraid of what might be going on. So they buy U.S. dollars because that's the reserve currency.
And that September dollar index is up 100 points right now at 97,500. Todd, all the best to you. Thank you very much, and happy Independence Day. We'll talk to you again very soon.
Thank you, John.
Christina,
have a great day. Have a great holiday.
You bet. Back to you.